Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Friday, April the 19th. I'm actually doing this on Saturday morning. I apologize, I didn't have a chance to do this yesterday, but I wanted to get one out for the weekend, um, simply because I know everybody likes to see these on the weekend. And so for that reason, I'm doing a quick one this morning just to show you what I saw yesterday. I'm not going to spend a whole lot of time. It is Saturday, and one of the reasons that I get asked about trading rooms a lot, why I won't do one, and and part of the reason is for the same reason I wanted to become a trader, is because of the freedom that you get as a trader. Um, I wanted that. I spent 20 something years in corporate America, you know, missed half my kids' life growing up on the road all the time, constantly stressed out over business things, just all the things that go with a middle management type job in corporate America, and that was why I wanted to become a trader so badly, was to still have an opportunity to make a good living without all the stress and complications and things that come along with working for somebody else. So one of the commitments I made to my family was that if I succeeded at this, because it wasn't easy and it took a lot of long, hard hours and work on top of my regular job and the other things that I have going on, and so it wasn't easy. But that's why I'm not interested in a trading room, because of the commitment, the time, and because the money's really in the trading. I'm a trader. I'm not a teacher. I just got into this teaching by accident, and I enjoy it because it does give me a chance to, it forces me to study my chart at the end of every day. It forces me to take a second look at everything. So there's a lot of good things I like about the teaching, and I really enjoy having met everybody that I've met. I've got trading friends all over the world, and people that I've gotten to know that I've never met, but I feel like they're family or friends because I've met them through this, the videos and our website and things like that. So don't take it the wrong way. I enjoy what I'm doing with this, but I just don't want to take it any further. And for that reason, that's the reason I don't want to be sitting in here on Saturday either, because of the commitment I made to my family. And most of you know my wife is a cancer survivor too, and that certainly gives you a new outlook on life. It makes you realize what's really important in life, and making money and being tied to a job, although is important, it's not as important as spending time with your family. So don't get, if you're into trading, don't let it consume you, because it's not good for you. Take your breaks. You know, usually on the holidays, the market will open for a couple hours in the morning. And I know a lot of people are eager to trade those 2 hours, and you're better off just to stay away from it and use those vacation times and enjoy your time away. But that's enough about that, because I'm just taking up time. Let me go and show you what I saw Friday, and so you can compare it to what you saw, and we'll go from there. But there were several good entries. It really was not a great trading day. It was mostly a trading range, and I should have had this down here like so, where you can see that real easily, that this was the low of the range. And we spent most of the morning, or the early part of the morning, I shouldn't say most of the morning, in here. Then we tried to get out of it, but we came right back in it over here again. You can see if you drag this on over here that it still came into play even late in the afternoon, or just after lunch anyway. But just not a whole lot going, and you would expect that after, uh, you know, which we've been seeing lately, and it was a Friday, and generally a lot of times Fridays are really strange. Generally they're slow and they're boring, but sometimes you get these tremendous moves on Friday. So you never want to write Fridays off, but generally this is a typical kind of Friday you might see, and you can see the range here real clearly if you draw your lines. If you didn't draw your line, it's probably not so clear. But I always tell you that I start my trend line off the first two swings of the overnight. Here's the close from yesterday afternoon, or from Thursday afternoon. So this is the overnight data right here, and you can see I drew my trend line off of that, and you can see how later in the day it pinpointed the three of the best entries of the day, really, or two of the best entries. This one wasn't so good up here, and we'll talk about that in a little bit. But you can see that, and there was actually a short right here too. I meant to mark that one. For some reason I missed that one. There was a short right there as well. But anyway, let's talk about the trades. Here's the first trade of the day, right just slightly after the open. And you actually could have gone long down here, but I think this was just a couple minutes before the open. And it's always risky to enter right before the open, so I didn't mark that one. But this is a failed second entry long right here, and we had this double top, and we had all this resistance across here, and you can see I probably would have had that move down to there because there's your closes and all. You get more closes and more touches right there, so that to me is the more legitimate spot for that by the time we were at this opening right here. And you can see that's a perfect turn off of that. You go short right there. It's a failed second entry long. So that there's a long trap right there, and there's always these people that try to get long up here at these highs, and they're all trapped in there. So going short right there was a good entry with expectations that we're coming down, back down to test this, or maybe down to test this trend line. And we really got both items occurred right there. So this is a great place. This is a failed break lower, and I talked about this, I believe it was on Thursday. I talked about how when prices actually get below a double bottom like that in reverse, that's even a better setup than a perfect double bottom, because this traps people in. It traps shorts in, it traps longs out that have their stops down here, and that's what they do. They run down here and they gun for those, and once it hits all those buy stops, it quickly reverses the market, and that's why most breakouts failed, at least temporarily, because everybody has their stops there, and everybody that's short is going to have their long stops up here, and that's why these are their sale stops up here, I'm sorry. And so that's why when we break through up here, it suddenly reverses. So remember that. It's key that you remember that, especially in the S&P, because it's a famous entry in the S&P. And but you had this failed break. It was close enough to the trend line, but notice we didn't touch the trend line right there, and you can see that. And but that doesn't matter, because there's, depending on how some people saw this, their trend line might have been drawn like that. It might have been drawn more like that, and then you get a perfect touch. And actually, that's probably the way it should have been drawn right there. So that is a perfect touch right there. And we actually got a little break here, but that's probably good enough to be considered a break of the trend line, because we got a nice strong close below it. But again, the support held right across there where we'd been holding all day. But we're getting ahead of myself on that trade. Anyway, back to this trade. Of course, we just talked about that trade. Here's your new high. There's a first entry, pullback, second entry. You can see that's a two-legged pullback to the EMA, but it doesn't fit our trading rules because it's not a trending market, and you're trying to go long up here near a strong resistance. So no reason to go long right there unless you're just really trying to risk a trade. And if you did, when it reversed and went short here, you should have reversed with it. If you did happen to get trapped here. And that's like most of the time that's what I will do, but I'm hesitant to teach you to reverse out of traps, because sometimes there's double traps and you just get fooled twice and you end up with two losing trades. But if you did, if nothing else, just exit right here, because then you only lose a tick or two and it's no real harm. But the key is don't be going long up here, because look at all these overlapping bars, look at all these dojis. It's in a trading range. It's at the high of the trading range. You need to be thinking short right here, and that's what I was thinking. And by being prepared, I was ready to go short right here. Nice easy scalp, and I was looking to exit down here because I knew with the strong support and the trend line right there that there was a good chance we'd at least get a bounce there. Even if we were going lower, I'm looking for a bounce right there, so I want to exit right here. And so I exited one tick off these previous lows. And I missed a couple of ticks, but hey, I got out right down here near the low. And you actually go long right there when this all wraps up and completes, and that's a long right there, because there's your failed break with the trap, knowing that prices are probably coming back up here to test this high. And so we're ready to. You could have even gone short right here, but I didn't mark this one because we just come off the trend line. And a lot of times that's when you're going to see your break higher, but it didn't happen. So if you did go short right there, it's not a bad trade, because there is two legs. There's one leg, pull back, and then the second leg up to this high. So if you were ready to go short up here, the better way that I would have done this, I didn't take this trade, so that's why I didn't mark it too. but I would have had just a blind sell stop right there, or limit sell order right there, and I would have got short right there. And even if you only had like a 1 or 2 tick failure here back to the EMA, I'm still out with my scalp. And that way, if this turns out to be a high, then I've got a run or two. But I didn't like that setup because we just come off the trend line and just had a failed break lower. So we had a lot of trap traders, and that's when you'll usually get your breakout. But it didn't work that time. There was still too much resistance up here. So it took this next try to trap them all, and then you can see prices worked on higher. And it still struggled. So um, the buying was outpacing the selling, but not by a whole lot. So it's still, it's just still more of a choppy range type deal there. So, but anyway, the next time we came up there, we broke higher above all that in reverse. So there's a nice short with the traps. And so I'm expecting prices, and there's 2 legs too. Look at that. 1 leg up, pull back, 2nd leg up. So that's a nice second entry short. And again, that's a failed second entry long um, at the same time. So I don't think that would qualify. On the bigger picture, that would be a second entry short, so that may be confusing. But here's your first leg up, your pullback, and then your second leg, which had 2 legs in it too, and that's common. So this is a second entry short on a bigger picture. It's a failed break higher. It's at a strong resistance, and even if you had your line up here, you can see that now we got a better double top up here, and so a nice place to go short. And then this was probably the better trade of the day. Because if you got long here, there's a good chance your runners survived this, and you could have got all of this. And again, this is the first break of the trend line, so we're still thinking longs. It's a second entry long. There's your first leg down, your pull back, and your second leg. The second leg just didn't go very far because of all the support here, and it quickly reversed, and prices went higher. And if you held your runners here, they should have survived, depending on how much room you gave them. And there's you 78 to about 83. So nice 5 points, 4 or 5 points you should have got out of that. If you were just trailing your stop all the way up, you would have got all of it, but the last 3 or 4 ticks there. This one is kind of questionable. I circled it. If you entered right here, on this right here, it was a good entry. And but by the time it got out here, even right here may be a good entry. But if you enter right here, there was nothing wrong with that. And if you kept your stop below your signal bar, you survived this. You had to ride all this out. And to be honest, if it were me, once we got over into here, I would have taken, as soon as I would have got a chance to get a tick out of this, I would have taken it and exited it. And I imagine that's what most traders did, and that's why prices came back a couple of different times, because the smart traders were exiting. They got the ones that got caught right here thinking they already had a short trap. What they do is every time they'd come back up here, they would all exit. And then next thing you know, you've got a nice little small trading range. So no reason to enter past this entry right here. And that's why I made the circle bigger. I just wanted to remind myself this circle should have just been like right here. But I made it bigger just to remind myself to talk about this, because people always want me to talk about traps and how you get trapped and why you get trapped. And that is why you get, and that's what happens. This entry right here is a short trap, and it's a pullback to the EMA, the trend line. It's a 2 bounces, 2 test of the what was resistance, and now it's acting as support. So that's a good sign to be going long, especially in a market that is biased to the upside. And but you can see it didn't go anywhere, and not enough traders liked it. And so it took a little more longer to work its way out of there. And then when it did, it just became a long trap, and then prices sold off the rest of the day. So anyway, if you went long right here, nothing wrong with that trade. But when prices didn't get out of here, you need to cut it short if you want to get out at break even, or break even plus a tick or two, or maybe even put your stop right here and be willing to, lose a tick. That's what I would have done. Personally, that's the way I would manage that trade. And if you held on and kept your stop below your signal bar, you would have even got your scalp, your full scalp, and maybe even a little more. But it's just not worth risking that. So if you find yourself getting trapped like this or getting caught in this congestion, just put your exit order at break even plus one or break even, and just go ahead and get out. And if you do break even plus one, you still make a couple of dollars. So uh, that's the smart move there. And because who wants to sit here for 2 hours and watch prices? Every time it starts to go higher, you're getting excited, and every time it's going lower, you're getting nervous. And I'm surprised that they didn't run it down here and run the stops before it went higher. So it's just not worth risking. So if you get caught in that, try to get out with a tick or two and be done. And then our final trade of the day, here's your trend line off the first two swings. We had a couple of different breaks. This was probably a good enough break to consider this being two new legs to a new high as well. And so it just took the market a while to work off and sell off. But when we had this lower double top here, that was a good sign. But I didn't mark any shorts in here because it just was dangerous. If you took any of these, especially this one right here, it's pretty close to being a failed second entry short, but it's so close to this support area, it just wasn't worth entering in here. It was a nice move down, and I hate that I missed it, but it wasn't worth fooling with. But you got a chance to make up for it right here. A perfect two-legged move, back to the EMA, back to the trend line, a breakout pullback short, all kind of reasons to love that entry right there. And that was an easy 3 or 4 points, maybe 5 points down to a new low. And by that time, you're in the 2 o'clock hour, and there's just nothing else worth filling with after that. So, but that was it. That's what I saw for the day. Hopefully you had a good Friday, and hopefully you didn't get chopped to death and all this stuff. I got an email from some guy, one of my traders, somebody that trades with me and reads my stuff and replies to me every now and then. But he was explaining to me, and I think it was on Friday, and I'm not picking on you. I just want to explain to you. But you talked about how you kept getting stopped out, and how could you make any money scalping out for 4 ticks when you take an 8 or 10 tick stop every time, just about every time you enter. Well, first of all, there's a couple of things there. You never go more than 8 ticks, and you usually don't want to be more than 8. If you're entering right here, you're entering 1 tick above that bar, and your stop should be 1 or 2 ticks below that signal bar, and definitely no more than 8 ticks. If you read our manual, it clearly tells you 8 ticks is pretty much your standard. If you watch any of my videos, I know I've clarified it in the videos. Our hard stop is always no more than 2 points. And if you got to go more than 2 points, then it's a very risky trade. It's not worth taking. And so that's point number one. Point number two is you don't always scalp out for 4 ticks. If you're concentrating on being a scalper, yes, but if you're getting stopped out more than 50% of the time, you can't scalp and make a profit. You got to have you got to be able to read a price chart better than a 50% win rate, or else you've got to go for more profit. So what you do when you enter here, instead of exiting on 4 ticks, maybe you start moving your stop up below each bar, or you've got a limit order up here and you keep your stop where it is and right below this bar, and you don't get out until you get your 2 points or whatever. So don't think you're locked into a 8 or 10 tick stop and you only go for 4 ticks every time, because you're right. You have to win more than probably 60% of the time. But once you learn to read a chart, you will win 60 to 70, 80% of the time, and it's not uncommon to get, my trading percentages have been close to even in the 90% for a long, long time. So 90% of the time, my trades work. That's 10% that I fail, I get wrong, and usually I get trapped or get fooled, or I'm not paying attention, or I get lazy and take a risk. And the reason I lose 10% of the time, I'll be honest with you, I think is more mental than anything. It's not because I forget how to read a chart, but it's either you just get caught in a trap, or it's mostly mental, or I just make mental mistakes. And that's the hardest part of trading. It's not hard to find a strategy that works. I believe that price action is the best strategy out there because you learn how to read a chart. But on the other hand, I know there's other strategies that work. It's not the strategies that don't work. It's the traders. It's the mental aspect of this business. It is very tough on you mentally, and even when you know what to do, even when you know the rules, you for some reason they're hard to stick to. And don't ask me why. It's just you got to be very disciplined and stick to your rules, or you will never be a successful trader. That's a key part. So, but trust me, I can tell you that our strategy works, and it works very, 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 very well. And so the strategy is not the problem. The problem is either one or two things. You either don't understand the strategy yet, or you're not very good at reading a price chart yet, or you're having mental issues. Um, and that probably sounds funny, but you're struggling with the psychological part where you're just doing the wrong thing for whatever reason. And it doesn't mean there's anything wrong with it. It's just common. It's human nature, and it's common, and everybody struggles with that. So you're not alone if you're struggling with the mental part of this game. So I said this was going to be quick today, and I'm getting on my soapbox here, and I apologize. But I think these are things that people need to hear and understand that no matter how good the trading strategy is, this is a hard nut to crack, and it took me a while, and it's going to take you a while. Every once in a while, I get somebody that's never traded, never looked at a chart. They buy my manual, they send me a few emails, they sim trade for a month or two, and they start trading. They start making money right out of the gate. But I'm going to tell you what, it's very rare that that happens. But generally, those people that do that are the ones that never traded before, because they don't have any other. All they know is what they learned out from the videos in my manual. So they don't have all these bad habits, and they don't, they learned what not to do before they learned the wrong things, in other words. So, but don't think you're going to be one of those people, because the odds are stacked highly against you. You being a newbie coming out and doing really well at this game right out of the gate. It just does not happen. And it takes a long time. And I'm going to say this, and then I'm going to call it a day. But this is the best example I've been able to come up with. But back long years ago, I was a pretty good athlete. I was a real good athlete. But it doesn't mean that even during my prime, I could have walked on to the football field and took Eli Manning's place and quarterbacked the New York Giants, and won a Super Bowl. It doesn't matter if I was 1,000 times a better athlete than Eli. The thing is, just because you got athletic ability doesn't mean that you're going to be any good or be able to succeed on the field without practicing and without spending time at the game and learning the game and spending time getting used to your teammates and how they play the game. And trading is very similar to that. You gotta practice, you gotta learn, you gotta understand and then you gotta get to know the personality of the market, because every market has a little bit different personality. And that's why I don't try to trade multiple markets all the time. Every now and then I'll open up another chart, but I've gotten where I rarely do that anymore. I just stick to the ES because I know it. I know, it's like my brother. I know him real well. Why go play across the street with somebody I don't know when I know my brother well, and I know his tendencies, and I know what he's likely to do? And but anyway, it's like that. You might be the greatest, smartest person in the world with the highest IQ ever, but it doesn't mean you can, like I said, step on the field and win a Super Bowl game, because this is the Super Bowl of trading. Don't think it isn't, because the most experienced and the best traders in the world are trading ES futures. And so you're playing the Super Bowl when you play this game. And so you don't walk onto the field and play in the Super Bowl until you've had a lot of practice and a lot of experience and proven that you can do it. So don't go trading live until you've proven it for a long, and not just for a week or two, for a long period of time, for months. And I know that seems like a huge commitment, but if you want to succeed in this business, that's the kind of commitment you've got to make. And it took me years. Trust me, it took me years of struggle and heartache, but I wish I would have known about price action. If somebody would have handed me that manual our manual on day one, because I would have shaved years and probably lots of heartache and lots of time. But, I'm not going to look back and say, I wish, woulda, shoulda, coulda. It is what it is, but I hung with it and I survived. And that's what you got to do. If you really want to make it, you got to be committed and you got to be ready for a lot of heartache and headaches, and you got to put the time in, a lot of time. So anyway, I'm going to get off my soapbox. I hope everybody has a great weekend. This is almost 25 minutes. It's going to take forever to upload. But have a good one. This is Mac with PriceActionTradingSystem.com. We'll see you next time.